Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks. And all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it.
A widely held belief within the Bitcoin community is that the leading cryptocurrency possesses unique attributes that set it apart from all other investment options, such as stocks, bonds, cash, or real estate. Prominent figures, like Michael Saylor, the founder and executive chairman of the Virginia-based business intelligence firm MicroStrategy, strongly advocate for this idea. Saylor often conveys the significance of Bitcoin in a straightforward and captivating manner. In a recent interview with Gardner, he expounded on these qualities, taking on the role of someone introducing Bitcoin to a potential investor for the first time. Saylor drew a parallel to two of the most pressing economic issues worldwide: monetary inflation and currency devaluation. While many individuals tend to focus on consumer inflation, which governments can manipulate, Saylor contended that monetary inflation is the more critical form. It determines whether one can maintain or increase their wealth over time, or if they will gradually become poorer. In the United States, the world's largest economy, this rate has averaged around 7 to 8% over the past century, while weaker economies have faced rates of approximately 14% per year. However, the situation changed when central banks engaged in extensive money printing during the pandemic. To grow and maintain wealth in the United States, Saylor argued that one must invest in assets yielding at least 9%, and even higher in weaker economies. However, few assets meet this requirement over a 30 to 40-year period. For example, the S&P index, one of the leading stock market indices in the United States, has historically only returned an average of 7% annually, helping to preserve wealth but not significantly increase it. Holding wealth in a fiat currency, like the dollar, is even riskier due to its substantial loss of purchasing power over time. Similar issues apply to gold and bonds. While gold can better preserve wealth compared to cash and equities, it doesn't offer substantial growth potential. Bonds, on the other hand, tend to erode wealth further. Saylor's unique perspective is that Bitcoin is the sole asset capable of both maintaining and growing wealth. Its scarcity, with a fixed supply of 21 million coins, sets it apart from assets like the dollar and gold, which have ever-increasing supplies. Consequently, Bitcoin is poised to appreciate over time, making it a standout choice for long-term wealth preservation and growth.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So Bitcoin is a conservative monetary network. In fact, there's no heat lapse, there's no leakage, there's no inflation. So if you're looking for something that you can hold for a long period of time, it's kind of like a freezer for your money, right? If money was food and it was spoiling over the course of days, you want a refrigerator, you put the food in the refrigerator, it doesn't spoil, right? So Bitcoin is like that. It's a way to freeze your economic energy so that it doesn't dissipate. And that's the first big idea. But the second idea is Bitcoin's a bank in cyberspace. So it's kind of a bank, a money transfer network, and it's the money. So it's all three of those things. So this is not as important to Americans that have a bank they trust. But if you live in Africa, and the bank is run by the cousin of the guy that just took over the country last week, then if you put your money in that bank, they're probably just going to take it. And if you want to convert your money from that local currency to another currency, they probably take half. Oftentimes, the capital controls are such that the country will fix the exchange rate at half of the real value. So every time you change money, you give half of it to the bank and you get the other half. And it's not a terribly fair thing for the proletariat. But what Bitcoin allows you to do is, if I wanted to buy your car and you were in Africa, I could pay you for your car in Bitcoin, and then you would get the fair exchange rate for the Bitcoin. Then you could hold the Bitcoin either on your own hardware device, you could be your own bank, or you could deposit the Bitcoin with a custodian somewhere outside of your country, because Bitcoin is a global network. So everybody in the world, anybody can be a custodian of Bitcoin. So there's competition. So you would have an asset which is pure property which is not being debased by capital. It's not being debased by manufacturing or devalued by manufacturing, and it's not being devalued by monetary inflation, right? And you would not have to rely upon the local banking system, the local government, or the local currency. All three of those are weak links. And if you look at wealthy people, most people that are wealthy in the world are wealthy because they converted their currency, whatever they earned, they converted it into property. Like they bought, what does the royal family of the UK have? They own the middle of London. What does the Emperor of Japan have? They own the middle of Tokyo, right? If you own a block in New York City or Paris, then when would you ever want to sell that? You probably never want to sell it. You want to keep it forever. Yeah. And if you want to stay wealthy, you buy that land and you hold it because it appreciates in value at the rate that the money collapses. But if you want to get wealthy, then you go leveraged long. So like if I can borrow a bunch of money, if I can borrow $10 million and buy $10 million worth of scarce desirable property, then every year it goes up in value 7%. And after 10 years, it's doubled in value. So now my $10 million acquisition is worth 20 million and I've got 10 million in equity. So then I refinance the property and I take out 5 million in equity and I live off of that without paying tax on it. And the next 10 years, the $20 million property is worth 40 million. And then after 10 more years, the 40 million is worth 80 million. So you see how your family starts to become very wealthy because your grandfather bought 10 blocks in the middle of New York or in the middle of Paris or some city. Of course, it has to be scarce desirable, right? People have to want to live there.
Bitcoin, unlike readily available assets such as prime real estate in Tokyo or New York, is a rare and sought-after digital asset poised to define the next chapter in human history. With the world's increasing shift towards digitalization, investing in Bitcoin and other leading cryptocurrencies today can be likened to acquiring property in major global cities several decades ago. Just as those properties didn't gain their immense value overnight, the cryptocurrency industry, despite its relatively short 14-year existence, continues to impress with its remarkable progress. Irrespective of current price fluctuations, it's crucial to recognize the significance of owning and holding Bitcoin. In the interview, Saylor delves further into this topic, emphasizing the enduring value of this unique digital asset.
You could think about Bitcoin as cyber Manhattan. Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks. And all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it. And when the place where you live decides to tax it, you can fly on an airplane, to Singapore or Monaco or some other place that will give you, or you can move from one state. Maybe you move from a high tax state to a low tax state, and then you keep your property. So Bitcoin represents digital property, and it represents a property right to 8 billion people that is being driven by the adoption of the billions of people. I mean, everybody in the world wants property rights. I mean, it's been the driving theme of human history for thousands and thousands of years. That's why people came to America. That's why they went west. That's why they went anywhere. So that's a very deep-seated theme in humanity. But the second thing is everybody wants money, and you either want it if you don't have it, or you want to keep it. Right. And there's a whole set of dynamics of people that are actually passing laws to basically deprive you of your money. If you own assets that generate rents, that's a currency derivative. The rents are going to be devalued. If you own bonds, that's a currency derivative. They're going to be devalued. And every single fiat currency in the world is built to be devalued. The only question is, will it be devalued at 7% a year versus desirable assets? Or will it be devalued at 14% a year? Or will it be devalued at 40% a year? But it is 100% certain that the currencies will be devalued. The bonds are going to have a negative real yield. They'll be devalued. Value stocks and commercial real estate that's valued partially on the cash flows will be devalued. So Bitcoin kind of represents more like that trophy asset, like the one of a kind trophy piece of art, or the one in a kind franchise, or the one in a kind beachfront property. Everybody wants. It's not valued based on cash flows. It's valued based upon its scarcity and desirability. Now, we have lots of examples of people that buy Ferraris as a store of value, or Rolex as a store of value, or commercial art as a store of value. But the ideal money is something liquid and fungible. And Bitcoin is liquid and fungible. So it's like that high quality, desirable real estate, but it's like buying a pure city block in the most desirable city on earth. And it's got a global brand, because it's not, Tokyo's only interesting if you speak Japanese, and Paris is maybe interesting if you speak French. But, Bitcoin is neutral in cyberspace. The Chinese like it, the Russians like it, the Americans like it, the Europeans like it, the Africans like it, the South Americans like it. Why wouldn't you like it, right? It passes this last Bernard Arnault test, which is, you ought to buy something that someone richer than you and more sophisticated than you will want to buy from you in a decade. And if that's what you're buying, then you're probably going to be okay.
Coinbase CEO Brian Armstrong believes that the upcoming 2024 U.S. election year will hold significant importance for the cryptocurrency industry. He encourages active participation in crypto lobbying efforts in the lead up to the election to facilitate growth and development within the United States. In a recent interview, Armstrong expressed concern over the challenging regulatory environment faced by U.S.-based crypto companies, where government members are hindering industry progress. He noted that the industry is currently experiencing regulatory pressures, with startups frequently receiving subpoenas and Wells notices. Armstrong specifically pointed to SEC Chair Gary Gensler and Elizabeth Warren as influential figures contributing to this unfavorable climate. Nevertheless, Armstrong clarified that not all members of the U.S. government share these anti-crypto sentiments. He emphasized the need for the industry to become more sophisticated and influential in its lobbying efforts before the 2024 elections to drive meaningful changes in the regulatory landscape. Earlier in the month, Coinbase initiated a 14-month campaign urging digital asset owners to engage with their representatives and advocate for favorable crypto regulations. This proactive approach is aimed at improving the industry's regulatory outlook and fostering a more supportive environment for crypto asset prices. Share your thoughts and opinions on the impact of increased lobbying in the crypto industry, and provide feedback on Michael Saylor's interview in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.